What's up, guys? I hope you're having a good day. It's Twiggus Trades back with another video, and today we're going to be talking about something a little bit different. I wasn't planning to make a video on this, but when I saw something happen in the market, I knew I had to, especially since I've been looking at that stock before and it dropped even more. It's not as speculative as I usually do, but it's still a really good opportunity, I think, in the short term and the long term. Just remember, if you like this video, make sure to like and subscribe, and without further ado, let's get into the video. Alright, so today we're going to be talking about Lululemon. Now, they just recently reported earnings. I was already looking at them as a buy, but now it looks even better. So this is their stock over the past 5 days. We can see the big drop off from earnings. We'll get into that. And then the past year, you can see it peaked at around $420, and now it's down over half. So a lot of upside opportunity if things do go well here. So here are the earnings, 310 versus 288, and they just missed on revenue, but a decent sized EPS beat, which is pretty good. So now I just want to get into some headwinds that have been facing the stock and why it dropped during earnings. So if you're part of my generation, you might have seen online, there's competition from more niche brands. This is Aloe and Vori, and they've been making this up by going international. They've gained a lot of ground in China. And they also talked about the tariffs, of course, and that's on Vietnam and China, and the removal of the de minimis rule, and it would cost $240 million a year and could rise even higher if that stays in place. And also, the comparable sales fell 1% in the U.S., but we see international, they're gaining a little bit of steam on there, which is pretty good. As we see there, the CEO says some of their new products that have come out have been a little bit stale, and customers have been more selective. Competition has intensified, which we talked about earlier with Aloe and Vori. And also, the economy is not looking great for making big purchases right now. And rate cuts are coming, so we could see that help, especially with a more expensive consumer purchase. So they issued way lower guidance, and they are estimating a reduction in gross profit of $240 million, which is a good chunk. And it's mostly because of the tariffs. And now let's talk about some tailwinds or some things that might help the stock in the short and long term. International. So they're not all across the globe. They started moving into China, and comparable sales, as we see, have increased 15%, which is pretty good. And they still growing stores, 14 more stores, and they also have a lot of market share to capture in Europe. So new store openings planned in Italy, Denmark, Belgium, Turkey, all across mainland Europe. And as it says there, it'll diversify revenue streams, and this could be a big growth driver for the stock to try and bring that multiple up and show they really do have more to grow. And this just happened last month. This is their first store in Milan, just showing an example of how they're pushing into those new markets. Now here's just some of their new things. Now, men's clothing, it was growing a lot higher than women's, like by over 10% last year. It's still growing more than women's by 1% respectively. And also, my brother mentioned he wanted Lululemon shorts, so I'll take that as a bullish signal as well. And another, backpacks, back to school. A lot of parents see it as an investment, even though it is more expensive. They're made of a little bit better material, waterproof, all that. So there's not just like the upper class can buy those. Anybody can buy them because it can be seen as an investment over time. And then footwear, they have some of those. Those haven't really caught on as much, but they always could. I just want to highlight their Peloton partnership, and I think this is a great way to advertise to customers just because it's that middle to upper class buyers, which is the majority of Lululemon's customers. They also just completed their share buyback program and repurchased 7.6 million shares from December 2023 to August 2025. And majority of those shares, a lot of them, a big chunk of them, have been through this last quarter with 1.5 million. So it could be a good signal. So these are some of the comparables. Lululemon is trading at 11 price to earnings right now, which I think is criminal, especially compared to some of these other companies. Now, Lululemon hasn't had that explosive growth, and it probably won't from the last 5 years, but it can still grow. And some of these companies like Under Armour aren't really growing, and they still have double the valuation. So I think it's kind of crazy, but Lululemon can get through this. I believe they can. So here's the annual. Yes, Lululemon has been high growth, and Nike has been kind of falling off. We see the past couple of years, and they still get a 34 price to earnings. And then Under Armour, we can see their revenue has also dropped off. They've actually lost money this past year, and they're double the price to earnings ratio of Lululemon. And then Adidas, they've also lost money. Their revenue's kind of gone down the past few years, and their multiple is way higher than Lululemon's. Now, here's going to be the catalyst of if Lululemon can not only go back to its fair value, but go even beyond into the future, make it continue that growth. Now, they are talking about increasing its new styles and improving its fast track design capabilities. Now, they're going to have to be very cautious about how they do this. I mean, as they said there, they don't want to make any short-term decisions that could hurt or damage the brand. But this could be great to bringing some of that U.S. growth back and bringing that comparable sales, even just by a few percent. A few percent is good. And I just want to highlight that the expectations are rock bottom. And Lululemon has priced in that tariff hit to their guidance. And that's the worst case scenario. So odds are things are more likely to get better than they are to get worse. And if a trade deal is reached, if there's an exception for athletics or something like that, or if there's a larger delay and anything. So I think it's just more likely that there's going to be upside in this company. They're able to grow in Europe, they're able to keep growing in China, and just bring those U.S. comparable sales up by a couple percent with those new product styles and offerings. So I think it's a great opportunity. And I'd say there's at least 20 to 25% upside, going like 6 months to a year. Probably even more if they can prove that they are able to grow their revenues and get some of that international momentum, bring some of the comparable sales up by just a couple percent. And tariffs, anything could happen with those, but as I said, it's more likely to get better. If you like this video, like and subscribe. It really helps out the channel. Check out my links in the description, or just leave a suggestion, leave a comment. I'm happy to take feedback, any stocks you want me to take a look at. I love researching. So thank you for watching, and I'll see you guys in the next one.